Imagine waking up tomorrow morning and discovering that every bank, every single one, from the smallest community branch to the largest global institution, has vanished overnight, leaving no ATMs humming on street corners, no banking apps loading on your phone, no place to deposit your paycheck, no system to process your rent, and no vaults holding the money people believed existed. The shock spreads instantly as millions try to buy coffee or fuel and realize their cards are suddenly useless because digital payments rely on a banking network that no longer exists. And within minutes, the economy experiences a silent cardiac arrest, a collapse not triggered by war or disaster, but by the disappearance of the trust-based infrastructure that holds modern civilization together. History reminds us that societies have always relied on some kind of financial intermediary, ancient temples storing grain and gold, medieval merchants issuing handwritten credit notes early, American towns depending on local lenders, and though these systems evolved over thousands of years, they all existed for one purpose: to create and maintain trust so that trade could happen smoothly, much like we rely on banks today to store wages, offer loans, process transactions, and essentially keep money flowing like oxygen through the body of the global economy. Now imagine the mechanics of this collapse through a simple metaphor. Picture the economy as a vast city lit by thousands of interconnected power stations. And banks are those stations, generating the electricity of trust, liquidity, and credit. Turn them off, and every light in that sprawling metropolis shuts down all at once, leaving homes dark, businesses frozen, and people wandering the streets trying to understand how everything fell apart so quickly. By the first hour, confusion replaces inconvenience as people crowd grocery stores demanding to pay with cash they don't have, because 97% of modern money is digital, created by banks through lending, which means when banks disappear, so does nearly all the money we thought existed. But even they cannot process internal funds because national budgets rely on the same banking pipes as everyone else. By hour 6, the collapse becomes visible. Fuel stations close because suppliers demand physical cash upfront, but cash is nearly impossible to find. Employers announce they cannot pay workers. Hospitals begin rationing supplies because medical distributors refuse credit. And global trade comes to a halt because shipping companies cannot insure or finance cargo shipments. Airports become ghost towns as airlines cancel flights, unable to purchase fuel or pay international landing fees. The world begins sliding into a form of organized paralysis, not chaotic, but eerily quiet, as if someone pressed pause on the entire planet. As night falls on day 1, improvisation emerges. Local store owners start creating handwritten ledgers to track who owes what, effectively becoming microbanks. Neighborhood leaders form small barter networks, exchanging fuel for food, medicine for services, and cigarettes, rice bags, and bottled water become temporary currencies. Even local gangs and black market groups seize their chance, offering loans with brutal terms, holding deposits for safety, and controlling the flow of goods in small territories, showing how instantly humans rebuild financial hierarchies when formal systems disappear. The turning point comes on day 3, when governments attempt to restore order by issuing emergency paper vouchers to replace digital money, backed not by gold or reserves because banks held those reserves, but by the promise that they will someday recreate a functioning financial system. International organizations attempt to negotiate global barter agreements for oil, grain, and medicine, while some countries with strong military presence seize control of their central banks to force stability, creating an uneasy patchwork of improvised financial survival strategies. Consequences ripple far beyond economics. Social trust erodes as people realize how dependent every aspect of life is on invisible digital systems. Crime rises in some regions while others develop surprisingly resilient community trade networks. Global stock markets remain frozen since there is no way to buy or sell anything, and the world begins preparing for a long, uncertain period without the safety net modern banking quietly provides. Experts warn that the true danger is not the loss of money, but the loss of liquidity, because money without movement is worthless. As weeks pass, humanity learns a profound lesson: banks were never just storage units for cash, but the invisible engines of trust, credit, and confidence that allowed strangers to cooperate on a massive scale. And without them, society doesn't explode into chaos so much as it melts into a slower, harsher, improvised version of itself. In the resolution, the documentary reveals the unsettling truth. We do not live in a money-based world. We live in a trust-based one. And when trust disappears, even temporarily, civilization becomes frighteningly fragile. And the final question to the viewer lands like a warning struck from the future. If tomorrow morning the banking system truly collapsed and your balance vanished into thin air, what would you do and how long do you think you could survive?